Tonight, government to sell off non-performing state enterprises following a sweeping audit. As SIGA latest report revealed a shocking 5.3 billion cedi loss.
Some be sold off. There are defunct enterprise sitting on assets, and government is using taxpayers' money, paying some security people, and people are demolishing the asset and selling. Something like that you don't hold, and you see it run down, down, and down because of sentiment.
We hear from one of those allegedly non-performing state enterprises, Bost, which has today been fighting back after the SIGA report disclosed they made a 400 million cedi loss. And Top Story is always brought to you by Vodafone and Prime Insurance. Joy News is learning that government is in the process of finalizing a report for budgetary approval that may lead to the selling of a host of state enterprises. Some of them, raft of them, will also see it being privatized. It comes in the wake of revelations in the latest SIGA report that disclosed that state enterprises made a combined loss of 5.3 billion cedis. Well, some of these enterprises named in this report are beginning to fight back, including Bost. It has been alleged that they made a huge loss of 400 million cedis. They say the report is inaccurate. We'll hear from them shortly, but that hasn't stopped the sector minister, Joseph Kujo, to detail a plan to fix the problem. He's been speaking to my colleague, Bless Oga, detailing why government believes a plan to either sell some of the state enterprises off, privatize, or list them on the stock exchange is the way to go.
You say, I've told them, every state enterprise must implement real-time accounting system. You use technology, and once you can efficiently manage real-time accounting, for example, will ensure speedy audited financial statement delivery for decision making, so far as the boards are concerned. So, in a more efficient way than looking for a cane and chasing people around. No.
That's not the best approach. But some are also saying, let's do an internal audit of all these state agencies. Perhaps looking at the SIGA report, the problem might be bigger than what is happening now. What's your take on that?
My take on that is that, first, you can't even manage what you cannot measure. I don't know how anybody can manage effectively what you can't measure. So, financial and operating reports, financial report, operations reports are the ones that should be up to date.
But don't you feel this casts a verdict on on government, and also what some would say is your inability to crack the whip?
Why do we are so negative minded and crack the whip? I personally believe in enterprise management to mean train the people to do it well, put in place the measures to avoid corruption. Do you understand? And fire the one who has been trained and still subvert the system to be corrupt. Do you understand? That is the level you go to crack the whip. But the person is sitting in an enterprise environment where the environment has caused the manager not to be able to even come out with his best, the environment. And then you are going to punish him for that? Do you understand? So first, you have to provide the environment for the person to be performed. It is at that level that you begin to crack the whip, when you have everything it takes for you to perform, and you are not performing. What I have personally seen is that in the state enterprises space, we have brilliant people capable of delivering the results we want, except that the environment has not been conducive. I'll cite one example.
You mean the civil servants are not helping? Or?
I'll cite one example. We put in place too much or excessive compliance for them. For example, MD of Ghana Post identifies a market opportunity to deliver 10 motorbikes to hold, for example, to make sure that it captures some market revenues. And then you say you should go to PPA, Public Procurement Act, because we are so minded of stealing more than performance that we say go to PPA. And the next 6 months, the man's proposal is at PPA. He's waiting for PPA to approve. What are you doing? Are you not creating a condition for non-performance? It appears as a country, our mind is so directed that
You feel we are fixated on the CEOs and all of that. But what's your
negative aspects, and we forget the training, the conducive environment we have to create for people to perform.
But if that has to happen, it has to happen from your quarters. What's your caution to the CEO of the various state corporations in the wake of public outcry that there's a need for efficiency and expediency in the public sector?
My caution is just financial compliance. One word, compliance. You operate in an environment, comply with the dictates of the environment. Every state enterprise, from transport to housing to post, like Ghana Post, to electricity generation, to VRA, to transmission, to distribution, every sector where the state enterprise is, that sector has compliance. If I say compliance, financial report. If a state enterprise for 12 years, like we met, situation we met, hasn't prepared financial report, how can you manage such a company? You sign a check, you give to them, it will sink because it's like a sinking hole. Are you getting that? So, compliance. Prepare your financial report, make them up to date. We are in 2022, April. Is your 2021 audited financial report available as dictated by the Public Financial Management Act? Is it available? If it's not available, that's where you begin to crack the whip, because we need it to make decisions going forward. We're rolling out measures. We are doing some policies. Equity study, for example, is to look at what we call recommendations. There are 6 entities that the equity study would recommend for cabinet approval to say, for this entity, invite a strategic investor into it, because the nature of its business and the nature of capital requirements, state cannot. So invite a strategic investor. There are some that you say, take it to the stock market for listing, because private Ghanaians will be interested holding shares of those companies, and by so doing, inject capital anytime that company needs capital. So some will be private, some will be sold off. There are defunct enterprise sitting on assets, and government is using taxpayers' money, paying some security people, and people are demolishing the asset and selling. Something like that you don't hold, and you see it run down and down because of sentiment.
So sentiments shouldn't apply here when you start selling, when we see that you're rationalizing and selling these companies.
The questions you have asked me, which one can be solved with sentiments? You see, none. None. Of course, those that should deliver welfare services, you separate them.
Okay, they will be exempt from the whole rationalization and sale of defunct companies.
No. They will be expected to, let's say, land commission. If you purchase land before and you know the kind of things they can do to deliver an environment that is conducive for investment. People coming to Ghana to, they say to invest, you definitely need a space. You want to acquire land, and it's taking forever to acquire land. And acquiring land to corruption, frustration, and so on. Something like that. You are not exacting profits from them, but you are exacting operational efficiency from them.
And that's Joseph Kujo. He is the Minister for Public Enterprises. So he was speaking on the back of the latest revelations in the SIGA report on the state enterprises, and it's some of the enterprises was coming for some strong criticism. Just last week, we heard from renowned economist and founding member of the New Patriotic Party, Mr. Kwame Pieni, who was calling that many of these state enterprises simply be sold off. As you've heard there, that is getting some traction on the back of the work that government is doing, that the minister just announced will be going before cabinet, that will shortly see some of these state enterprises being sold off or privatized. Well, one of the state enterprises mentioned in the report and has been reported they've lost some 400 million cedis, has been fighting back today, saying the report that they've lost that much is simply inaccurate. That is BOST, the Bulk Oil Storage and Transportation Company. They have a statement out. My colleague Ernest Menu is in the studio with me with details of this. So what's the basis of this claim that report is inaccurate?
So this is a three-paragraph report. The first paragraph talks about the underlying business of BOST and its profitability. In the first line, it flatly denies the report of they making a loss of 400 million Ghana cedis. Then the second paragraph talks about the net loss after tax. And then the final paragraph talks about how BOST has been turned around. Now, the very first paragraph and the third is essential for this conversation. So, BOST says in this statement that the managing director in his submission at SIGA was emphatic that the company achieved a profit before tax of 9,844,673 versus an estimated 30 million in the year 2020, as against a loss of 158,478,676 in 2019. So what BOSS is saying is that it was estimated that they will make a profit before tax of 30 million in 2020. However, it made close to 10 million. Now, this sharply contradicts, or is in sharp contrast with what was recorded in 2019, where there was a loss of 158 million in excess of that. Now, this is the part I think that we need to pay close attention to, Evans. It says that he, however, was quick to add that unpaid tax obligations over the past 5 years, or over the 5-year period to date, the reduction in the value investment in gold, and the forex difference on dollar-denominated loans may turn the profit before tax into a net loss for the period.
In other words, so let's put this in context. The reason why they issued the statement, the MD of BOSS had been widely reported as having told and reported to SIGA that they were expecting an operating profit before tax of 300 million. Yes. And then this report comes out, and the report is that they have 400 million loss.
Exactly.
And their point is that that's the clarity there.
That's the clarity.
That when they make that point, it was within a context that, yes, we've made this profit, but other items may offset it.
Exactly. If you consider the investment in gold, if you consider the forex difference on dollar-denominated loans, it may turn the profit before tax into a net loss.
Okay.
Then it continues to talk about how they have performed over the period. This enhanced performance was driven by external operational efficiency initiatives, including but not limited to massive repair works of our storage, tanks, pipelines, marine assets, and all of that. And says in the past 2 years, our income earning asset has improved from 18% to 91%. From 18% to 91% in the past 2 years. That's what BOSS is saying as far as its income earnings asset is concerned.
Okay.
Now, to the third paragraph, Evans, it says that your company, BOSS, has been turned around. Any comprehensive and objective analysis of the auditor statement for the past 5 years will show a company on track to higher performance through enhanced efficiency, and we look forward to capitalizing on these modest improvements to make BOST an example of a world-class state enterprise.
Okay, let's interrogate this a bit more. Let's speak to the director of corporate communications and external relations at BOST, who joins me on the telephone line right now, Mr. Malik J. Mr. J, thank you for your time here on Top Story.
Thank you for having me, Evans, and good evening to your listeners.
So clarify for me. I mean, it's a fact, is it not, that within the period you actually made a loss?
Thank you. The statement that the managing director made was in respect of profits before income tax. When you study the audited financial statements of BOSS from 2016, there was a loss before income tax of 533 million plus, which is half a billion. It declined to 112,287,000 it went, and as of 2019, 158 million was the loss before income tax. So to have made 9.8 million cedis profit before tax is where we say we have turned the loss-making situation around in respect of the profit before tax situation. Now, when it comes to assessing the efficiency of a business and how the management is managing same, you look at whether the underlying business is profitable or otherwise. From an administrative expense position of 533 million in 2016, the total administrative expenses of the company in the year 2020 declined to 199 million, which is less than 200 million. In a country of increasing inflation and depreciation of the cedi, the expectation is that administrative expenses would on average be on a rising trajectory. For them to have fallen all the way from 533 million down to 199 million tells you something big is happening. With a total of 18% of revenue earning assets in operation as of January 2017, as we speak today, 91% of all revenue earning assets of BOSS, including 4 river barges, 2 major pipelines, are in full operation. 15 out of 51 tanks of the company had been decommissioned. As we speak, 12 out of the 15 have been fully serviced and are available for the storage of products. BOSS is having a strong cash flow position and no longer goes for overdrafts to be able to pay salaries of workers and such other things. This tells you that the company is on its way out of the woods.
Yeah, I mean,
we look forward to increasing this profit before tax in the year 2021 when the audited financial
Malik, let's clarify this.
In the next few weeks.
This report that you raised issue with fundamentally said you made a loss. I mean, you're not disagreeing that you did. What I hear you say is you made some improvement compared to what used to happen in the past, but you still recorded a loss despite the improvement you've made. That's basically what it is it not?
Let me clarify here that our response is not in respect of the SIGA report. Our response is in respect of some news item making rounds on the online media that we had made a profit of 400 million Ghana cedis over a 2-year period, which is palpably false.
Okay, but
that is what we came to respond to.
Okay, but to clarify, Malik, you made a loss nonetheless. So if you're disputing the 400 million amount
before tax, which had ranged from 2016 up to 2019.
Malik, can you hear me? So you're disputing the 400 million loss stated.
Yes.
So what is the quantum of loss then that you admit you made?
In attachment to the press release, you have the audited financial statements in respect of 2019 and 2020, and you will see 209 million on one and 306. And we explain further that BOSS has 20% stake in the stocks of GOIL. When GOIL share prices fell in 2019, a total of 101 million Ghana cedi was lost to BOSS, which was hit against our profit and loss statement. The management of BOSS is not responsible for the determination of the share prices of GOIL. And this becomes something that would not be fair to assess whether we are efficient or not with.
So you're saying that BOSS is just a second, Malik, just to clarify. You're saying just a second. You're saying that GOIL's inefficiency was passed on to yours, on your books.
I'm not talking of inefficiency. When it comes to the pricing of stocks on the market, the perception of investors could change whether the prices go up or come down, but not necessarily as a matter of inefficiency. I've not mentioned.
Okay. So when you say it was unfair,
of the price of GOIL stocks, though we hold the 20%.
So when GOIL stocks fell, that then affected your.
We lost 101 million Ghana. That was hit against our profit and loss statement. Among other things, when you have dollar-denominated loans in your portfolio, and there is a depreciation of the currency, the forex losses is also hit against your profit and loss. And Boss as a company is not in charge of the management of the value of the city. And for that matter, when forex losses come and get hit, and you come to the bottom line and there is a negative, a certain management performance, in our view, with that number would not be fair. That is why we focus very much on the profits before tax, which shows whether the underlying business is profitable.
So let me read to you
from the numbers as you have.
Let me read to you from page 51 of the SIGA report. It says profitability. Boss posted a net loss of 291 million cedis for 2020. Is that accurate?
Very accurate. But let me tell you that in 2021, Boss had to revalue its assets, some of which were procured in 1993. In accounting, when you procure a fixed asset, you work depreciation on it. And when you depreciate an asset at 10% over a 10-year period, its value comes to zero. So most of the tanks you see at our depots had actually been valued at zero per the books of Boss. We went ahead to do a revaluation of these assets. And when you revalue assets, the difference between the new value and the old value is tax. And the tax obligation that arose from this is about 292 million Ghana cedis, resulting in the 291 million loss we are talking about. And that is why I still insist that it would not be fair to assess whether we are doing well or not by the bottom line, but by the profitability of the underlying business, of course.
That's Malik J. Thank you, Malik. Malik speaks for the Bok Oil Transportation Company. And of course, they vehemently raising issues with some of the reporting there. It says accurate, but there's explanation there that accounts for it. But let's return to the government response to all this, which is fundamentally that, yes, government admits some of these state enterprises are simply just bad and need to be sold off. Completely privatized or find some strategic partners for this purpose. I want to bring in the president of Imani Africa, Franklin Kujo. Franklin, thank you for your time here on Top Story.
My pleasure.
I mean, we're both at this event you pulled off with GIZ, where renowned economist and founding member of the MPP made this recommendation.
Maybe the time has come for the NPP, the governing party, to do what it says it wants to do. Let us do a tender and sell all the non-critical state-owned enterprises that are involved in production and distribution of goods and services, so that the government sector becomes small.
I mean, frankly, so now we just heard from the sector minister who says government is going to do exactly that. In fact, the report is going to cabinet shortly that is recommending three things. Some of the state-owned enterprises will simply be sold off. Others they will find strategic partners for. Others they will list on the stock exchange. Good move?
You know, I'm not surprised about this revelation. A couple of weeks back, my team and the said minister and the vice president with the economic management met and were discussing a related matter around port. And I think there was an indication, in fact, the vice president's posture essentially was that if there were institutions of state-owned enterprises that were cumbersome in managing and they were not delivering value, then we may have to find alternative means of encouraging that value addition to the economy. So this coming on the back of figure and on the back of the conversation you related with GIZ, which you moderated excellently, I must add, it's not surprising at all. And I think it's long overdue. It's really long overdue.
You know, in the past, when we've had attempts to privatize SOEs and sell them off, it's always come with a bit of challenges. It's not as straightforward as that. Determining which ones to sell off, how much to sell it for, because some of them render some services that you simply cannot privatize. What do you say about this? Some say maybe this is not the way to go.
No, I totally agree that the very essential one, even though there are many jurisdictions where water is privatized, by the way, even prison services are privatized some parts of the world. and they're running efficiently, I would definitely make an exception in our case when it comes to, well, maybe some aspects of the board, as Mr. PhD said, electricity and water. But the fact of the matter is that we cannot continue hemorrhaging even when these essential services are being handled by state agencies. I think it gets to a point where we ask ourselves, are we running this based on social rent, or we want to undertake commercial, we want to expand services to people, and therefore we have to think about it with commercial terms. The other point I need to add is that, yes, we've had instances in the past where some of these SOEs have been valued and then sold to cronies. I'm not talking about those crocketing capitalist arrangements of what you call chronic capitalism. That's not what we should do. I think we should value it and allow independent experts to determine the value, and then we take it from there. But if I had my way, I'll privatize even water, because it's money we use in making the water clean for it to be sold. And of course, it can be sold at some subsidy, and then other affluent areas may be asked to pay a bit more for it. So there are various parameters for determining the state ownership or private ownership of these assets. That's the way.
Frankly, I'm grateful that you joined us with your thoughts. I want to hear from you also, 05511119997. Should these state enterprises be sold off, as government has indicated to us tonight? And which ones would you want to see sold off completely? Share your thoughts here on Top Story. Of course, on Newsnight, I'll share a few with you.